सीधे चलेंगे दावोस, जहां पर चल रहा है वर्ल्ड इकोनॉमिक फोरम, और वहां हमारी सहयोगी चैनल CNBC TV 18 की मैनेजिंग एडिटर शिरीन भान बात कर रही हैं RBI गवर्नर शक्तिकांता दास।
Policy has to remain actively disinflationary till we reach the target of 4% on a durable or a sustainable basis, and that is our current stance. You see, ultimately, why are we working towards this 4% inflation? Because a stable inflation, a stable what we call price stability, provides the support, the required support. It acts as a bedrock for growth, for sustainable growth. Otherwise, you will have off and on data of growth doing well, then again slipping back. And a premature, you are right, absolutely right in saying that any premature pivot in our policy, it can be very, very costly for the economy.
You know, you talked about growth, sir, and the NSO advanced estimate has pegged growth higher than the RBI's estimate. On the back of the data that we are looking at today, do you believe that there is an upside projection or growth could do better than your own estimates?
You see, we said 7% for the current year. Our earlier projection for current year, that is 23-24, was 6.5%. In October, in end October, when I said, you know, in one of the events and followed up by our monetary policy statement, when we said 7%, our previous number was 6.5%, and I think the market was also around 6.5%. That time, 7% was seen as optimistic. But subsequently, the NSO, that data which came about a month later, so naturally they had a later period data, and NSO has access to several data to which we don't have access. Now 7.3, and in fact in the monetary policy conference, we had said, in fact the Deputy Governor had said that, you know, it's actually 7% is a conservative estimate. So we were expecting that it can exceed 7%, but we wanted to be absolutely, you know, absolutely sure about our number. Even for next year, I have said yesterday that we, you know, the growth momentum is a momentum of economic activity is well maintained, and next year growth will be touching 7%. And when that happens, for 4 consecutive years, successive 4 years, India would have recorded a growth of 7% or more.
So confident as far as growth is concerned?
We are confident. Unless, you know, we are confident, unless I am confident, I will not say. I will not speak about it.
I'm sure about that. But let's talk about what's happening as far as the markets are concerned. And yesterday we saw a significant impact on the banking sector, on the banking stocks in specific. HDFC Bank came out with its numbers. There is a concern now as far as deposit as well as credit growth is concerned, and deposit growth not keeping pace with credit growth. Are you concerned about that?
You see, our deposit growth, if you see the last 1 or 2 years, the deposit growth has been around 12 to 13%. The credit growth has been about 15%. Now, obviously, you see, it's not that you get X amount of deposit and you extend that X amount as a loan. It's not like that. Each loan that you extend, money creates money. The money multiplier happens in the market. So obviously, the credit will be little, you know, will always be little higher. Now the question is whether it is unduly higher or it is sort of has a correlation with your deposit base. At the systemic level, at the individual entity level, at the moment, we don't see any risks. We are doing our regular, you know, our supervision has become much more intense. We have now an ongoing method of you know, our supervision is ongoing. It's not once in a year annual inspection or annual supervision of the banks. So at the moment, the Indian banking sector at the systemic level is very robust. Even at individual entity level, it is very robust. With regard to stock prices, the stock market prices, you see, stock markets have their own dynamics, and stock market, the prices, share prices in the stock market do not necessarily reflect the fundamentals of a company. I'm talking in general terms, not with reference to a particular bank. Generally, if you see, the stock prices are determined by so many other factors and do not necessarily reflect the fundamentals of a company. You have examples in every sector, whether it is the financial services or banking or any other sector you look at. There are companies with very strong fundamentals, but its share prices should be low, and the converse also happens. So therefore, it will not be correct to judge the health of a particular sector like banking in particular in terms of share prices, movement of share prices, and that too on a single day.